Hi, everyone, and welcome to FF Live. My name is Ezra Konowitz. I'm a director at Founders Intelligence. We're the strategy and innovation consultancy arm of Founders Forum. For those of you who may not know, Founders Forum is a global community of the world's top tech leaders, corporate CEOs, senior investors, and world leaders and influencers. So I'm delighted to welcome you to today's episode of FF Live on the premise of accelerating diversity, which we're hosting in collaboration with Founders Forum and with SoftBank. With that, I'd like to introduce today's panel. I'm joined by Catherine Lenson, Managing Partner, CHRO, and Head of Social Impact at SoftBank Investment Advisors, and Ezechi Britton, Partner and CTO at ImpactX Capital Partners. He's also an ex-founder and CTO of Neighbor. Clearly, those are rubbish introductions, do them no justice. And I'd love if each of them could just give us a tiny bit more detail on their backgrounds, perhaps starting with Catherine.
Thanks so much, Ezra. It's such a pleasure to be here, and I'm so excited for the conversation we're going to have. Well, listen, you covered it. I have the privilege of being a managing partner at SoftBank Investment Advisors, which is the firm that manages the SoftBank Vision funds. We're part of the SoftBank Group, which is headquartered in Tokyo and has a multi-decade history. I, in my day job, look after a couple of things. So everything which we call social impact. So that's what you might think of as kind of traditional ESG on the investing side, more of the corporate social responsibility, philanthropy, our own volunteering. So that collection of things that we think about as social impact. And the Emerge program, which we'll talk about in a little bit, falls within that. I also have the privilege of leading our people teams. And so it's been a fabulous journey looking at the growth of the organization over the last, coming up for 4 years now that we've been around. I guess on a more personal level, I grew up in the wilds of Lincolnshire, which sometimes I have to explain to our American colleagues quite where and what Lincolnshire is, but I'll spare that for this European audience. I'm the first generation in my family to go on to higher education. And so when we talk about that kind of outsider feeling and what it feels like to break into a club, I have the benefit of a wonderful university education, but I remember all too well what it felt like to be a nervous 18-year-old stepping into a university that no one had been to, either in her family or really from a school perspective. And so that informs a lot of the way I think about this topic.
Thanks, Catherine. And Ez, could you give us a little touch on that?
Yeah, brilliant. Thank you, everyone, for having us today. It's a pleasure to be speaking to you all. So, Ezechi Britton, or Ez, as most people know me, as you said, founding member, principal, and CTO in residence for ImpactX Capital, which is a venture capital fund supporting underrepresented entrepreneurs across the UK and Europe. And when we say underrepresented, we mean by way of venture capital allocation. So historically, less than 4% of venture capital has gone to non-white men, fundamentally. So if you fall into that category, you fit our demographic. Obviously, we have a few other criteria just beyond that, but that's our key focus. Besides that, I also am one of the co-founders and CEO of an organization called Code Untapped, which is a digital skills accelerator, which helps to identify, upskill, and place diverse technology talent. So the D&I, or everyone refers to it as diversity inclusion space, but I like to refer to it as the diversity and innovation space, is something that I'm very much focused on at the moment. And, in a former life, I think it's important to touch on this. I was a developer. I spent over 10 years in investment banking technology space, first at Lehman and then Credit Suisse. And then I was co-founder of Neighbor, as you quite rightly said, where I was a founding CTO, which is a multi-award winning business that founded by 3 ethnically diverse individuals that went on to raise over £200 million and provided over £170 million of salary-backed lending to UK-based employees. But ultimately, we're here to talk about how do we support and accelerate underrepresented founders and some of the challenges there. And as Catherine alluded to from her background, I grew up in Southeast London. I grew up in Lewisham. My secondary school had a 5/8C pass rate of 14%. My parents were teachers. My mum had to work as a cleaner after moving over to the UK from Nigeria. So I absolutely had to work my way through the barriers in order to achieve and get to where I am today. So this subject is one that's very close to my heart. So hopefully this will be a good talk, and I look forward to the rest of the session.
Yeah, indeed. Thanks so much, Ed. So I wanted to start with something sort of topical. The panel today comes hot on the heels of the much debated government report from the Commission on Race and Ethnic Disparities. As I'm wondering if you could maybe tell us a bit more about your perspective on this as it pertains to the tech world.
Well, let's start on a thoroughly debunked report that was put out by the Race Commission. I mean, look, I'm not going to go into too much detail about the report, because I think pretty much everything that needs to be said about it has been said. What I will say is there's a massive disappointment as far as I'm concerned, and a hugely missed opportunity. And everyone, you know, that report covers a number of areas, but everyone in this virtual room today is here to talk about entrepreneurship, enterprise, venture capital, building startups. And that report was about 258 pages. I think about 7 pages was dedicated to this area, which, as far as I'm concerned, is one of the biggest drivers of value creation in the UK. And if we look at fintech, for example, which is my background, the UK is one of the world leaders in that space, and yet startups, enterprise as a whole, gets about 7 pages. And I think one of the main recommendations, well, it wasn't really a recommendation, but Dragon's Den gets mentioned. And ultimately, it comes down to, as much as I love HSBC, we should support HSBC in running accelerator programs with universities. And that's pretty much it, right? So all I can say is, look, it was a very disappointing report to read. I feel it was a missed opportunity. There were some useful points and observations in that, but ultimately, you know, this is what we're here for. And I think there's a lot of us on this call today who can personally speak from prior history and experience as to why that report was an absolute waste of time, nonsense, complete missed opportunity. And that's all I want to say about it.
Thank you. Catherine, I wanted to switch the focus and just touch on D&I at SoftBank. So that's been an important point of emphasis. We talk about the Emerge Accelerator in our white paper. That's obviously an important piece of this. I'd love to hear a bit more about that and hear from you about how SoftBank as an organization helps to, or is trying to help level the playing field for underrepresented founders.
Yeah, thanks, Ezra. I'd love to do that. So maybe just a couple of words of background on SoftBank for anyone not familiar. We think that our greatest asset is our ecosystem. So we have about 140 companies now invested in between Vision Fund 1 and 2, plus obviously a SoftBank group with a number of other companies within them. We'll talk in a moment about the Opportunity Fund, which sits within that. And so that convening power enables founders who are within our family to build relationships across the portfolio that allow them to accomplish so much more together than they could on their own. And we're proud to have done all of that within the last 4 years, and quite a 4 years it's been, as you can imagine. Emerge itself, which is an accelerator program for underrepresented founders, was established in 2019. We ran our first cohort in the spring of last year. And, you know, we'll talk a little bit about Emerge as we go, I'm sure, but we were absolutely staggered by the level of interest in the first Emerge cohort that we ran, which was in Silicon Valley, with virtually no marketing outreach. The brainchild of an extraordinary colleague of mine called Damios Nsanya, who really put the whole thing together, you know, on the side of her desk almost until it became her whole desk. Virtually no marketing outreach. You know, those of us who were involved and sponsoring, talking to our network about it. And what we found was that the demand for the program was unbelievably higher than we expected. And so we're delighted that it was such a success, and delighted to be launching the next cohort in EMEA this spring. To give you a little bit of a sense of what the program ended up looking like. We invested through the Emerge program in 9 female founders, 10 Black founders, and 2 Latina founders. We also have within the SoftBank family the Complementary Opportunity Fund, which is a little bit like ImpactX, a specific fund focused on investing, at a slightly later stage in diverse founders. And there again, they have in the last year or so invested in something like 30 Black founders, 23 Latino and Latina founders, and 6 female founders. And so we're very excited about our progress along this route, but also incredibly humble about how much more there is to do and how early we are on the journey. So that's a taster. We can delve further as we go.
Yeah, that's brilliant. Thank you. So we focused our white paper on trying to find some of the solutions to the many problems that exist in this space. And we split it out into 3 sections. I was thinking we'd sort of organize the questions and the conversation today around those 3 sections. The first is on sourcing underrepresented founders. And Catherine, you just touched on that. And the amazing job clearly that emerged in the appetite there. So I wanted to start there. One thing that we found, and as mentioned this already as well, is in the UK, minority ethnic only teams received only 1.6% of all venture capital funding between 2009 and 2019. And that's despite the fact that you see in the US that diverse founders generate 3.3x realized multiples on exit compared to only 2.5x generated by their counterparts. As I wanted to sort of push this over to you, we were talking the other day and you said, people often say they'd love to invest in underrepresented talent, but they struggle to find it. And that said, you've got a vast pipeline. I think you said you had 1,000 companies in your pipeline. How do you approach building the top of that funnel? And I'd love to hear also about, if you have thoughts on what you can do to support those many, many companies, of course, that you can't invest in.
Yeah, so that's a really good question. It's one that we hear a lot, which is there is no pipeline. There's a lack of these founders out there, right? So that's always the argument. And then it's, well, we can't reach them, we can't find them. So I can tell you, ImpactX, we're a young fund, right? And we're still fundraising as well. We've only been operational for 2 years. And in that time, we built a pipeline of over 1,000 founders from various diverse backgrounds. And I actually have the statistics right here. And I can tell you that of those over 1,000 companies that we've reached out to, that we've got in our pipeline, almost 500 of them are Black founders, over a third are female founders. So this idea that they're not out there is ridiculous. But then the key question comes down to, well, how do you find them? We can't find them. We have these massive funds and we cannot find these people. But all we did was put our hands up and say, here we are, right? That was literally it. We just went out, said, we're ImpactX. We are here to support underrepresented founders. We didn't do a huge marketing campaign. We had some interviews. We've done panels. We've done forums. We talk about what we do. We open the door and we say, here we are, right? It's that simple. And the other key thing that we've done, frankly, is that we've created an inbound approach whereby founders can reach out to us directly through our website, fill in the information, and I review all the applications that come through the door. And then we do our best to reach out and speak to those founders. Of course, within our industry, warm intros still happen. It's part of how the industry works. But what we try to do is ensure that the doors are open for those cold introductions so that founders who would struggle to meet us can get the opportunity to at least get on our radar, even if it doesn't mean that they get invested in. And then when I hear this argument, there's not enough demand out there, and that's another thing you hear from LPs. I mean, you've already talked about the returns. From my perspective, it's simply an undervalued asset class if you want to look at it in harsh terms, right, or hard economic terms. But is the demand out there? Well, I can tell you from that 1,000 company strong pipeline that I have, there's over £1 billion worth of fundraising demand in that pipeline already, right? Over half of them are tech startups. The rest are fairly evenly distributed between health, education, and lifestyle, creative, production, and beauty. And what's the last one? I think that's all. Those are the main categories. And then our big category, where 50% is technology and digital, right? So this idea that they're not there, they can't be found, there is no demand, there is no return, is an absolute nonsense. One of our startups returned 5x within the first 12 months. of us investing in them, right? And that was two twins, two mixed race lads. And again, that was through our process, us finding them, us investing and getting involved in these early stages and being able to add value. But there's a really important point there. There's over £1 billion worth of fundraising demand. ImpactX, once it's fully funded, will be £100 million fund. That's less than 10% of that, right? We cannot fund that entire pipeline. You would need 10 ImpactXs to fund that entire pipeline for this round of funding, right? That's not their, that doesn't cover their Series A's or Series B's that they go on to. It doesn't cover, you know, the next set of founders that we'll find over the next 3 to 4 years as we get better and more well known. This is just the group that have reached out to us over the last 2 years as we've got going, right? And so they're absolutely there. You have to get out there. You have to say that this is what we're doing. And fundamentally, you have to have people on your team who look like them, right? Who can actually say, we understand the challenges that you've been through. I'm actually quite unusual for a VC in the UK in that I have operational experience. I've run a startup. I have technology experience. I'm a computer scientist and I've been a CTO. And fundamentally, I come from a, as you refer to, a Bain background, right? Unlike the 1% of the 1% of the 1%, it's almost unheard of to have people like me out there. But our entire team is made up of people like this, right? And that is what sets us apart. That's why these founders want to come out and reach out and speak to us. But the reality is we can't support all of them by ourselves. Of that 1,000 companies in my pipeline, we've invested in 10 so far, right? It's just not possible. But then it comes down to what can we do to support those companies outside of that pipeline? And we've got a great team of founding members. I mean, if you look at us, it's like the Black Illuminati, right? We've got Sir Lenny Henry is one of our founding members. We've got Rick Lewis, who's our chairman and the CEO of Tristan Capital Partners, who's top of the Black Power list a couple of years ago, runs the largest property management fund in the UK. We've got Ursula Burns, who is the first female Black CEO of a Fortune 500 company. She was CEO of Xerox, she's on the board of ExxonMobil, Uber, and any other number of companies as well, right? We've got Adrian Lester, the actor. He's one of our founding members. These are people who are there, part of our network, willing to help and try to support these companies that we try and work with. But I think the most important thing anyone can do in this ecosystem is to provide access to other investors, but also to potentially to clients. And we'll come on to that a little bit later as to some of the roles I believe accelerators can fulfill. But the key thing here is being able to create that ecosystem for these founders who struggle to get their foot through the door, struggle to get in front of investors, and struggle to get the support and the advice and the feedback that they need.
Yeah, no, I couldn't agree more. Catherine, I wonder if you have, that was a super complete answer. I wonder if there's anything to add?
I think the only thing I would add is to echo this point around the commercial attractiveness of the companies that we're talking about. And, you know, listen, I come from a part of our business which looks at doing good with our time and with our money. We have the majority of our business, which is a returns-focused business. It is not an impact investment fund, although we have some super interesting investments that wouldn't be out of place in an impact fund. But we invest for commercial returns. The point I think that is most often misunderstood on this topic is that somehow this is in any way not a commercial endeavor. Like, I recoil when I hear investors talking about like grants or somehow placing this in the sort of ESG space. And as I say, you know, ironic because that's a little bit, you know, where we started off at. This is a commercial endeavor. These are unbelievable companies run by some of the most inspirational founders I've ever met, which are going to make incredible returns for the people who are fortunate enough to invest in their early rounds. I mean, that's the long and the short of it. Like, you bet we're doing some social good on top of it, and that's a fantastic thing, and we can all be happy about that. But by the way, these are highly commercial, investable assets. And anyone who doesn't come at it from that angle, I think, is missing a big trick. That's what we've come to realize for sure.
Yeah, and so one thing that's interesting is, you know, VC tries to be data-driven, but ultimately it is quite speculative, of course, and there's a lot of conviction within that. And I guess many underrepresented founders don't necessarily fit into the kind of investment patterns, the investors' investment patterns that we've seen, you know, that have developed for better or worse over the last 20 years, based on, you know, imperfect data and sort of pattern recognition. I wonder, what has SoftBank done to reduce the dependency on that kind of often unreliable signal base? And how do you help therefore to recognize those potentially great, as you said, amazing founders building incredible businesses that maybe just don't quite sort of, not just literally, but like in their backgrounds and their CVs don't necessarily match what you've often invested in the past or what others have?
Yeah, that's a question I think I need to answer with a large level of humility, because I think that for all of the stuff that we've done that we're proud of, we've got a lot of road still to cover on that. And it's a very interesting question for anyone who knows us from the inside. We are an incredibly ethnically, culturally diverse organization. For many of us, it's by far the most diverse environment we've ever worked in. And that's a fabulous thing, and it feels great until we start digging under the surface and asking, but exactly what types of diversity and what does that look like for a representation issue? And we have, of course, the same representation issues as the industry overall, even if, you know, for example, every single member of our investment committee is non-white. That's an amazing thing in itself. When we start asking ourselves the questions around, you know, signal recognition that you're quite rightly asking, I think it would be wrong to assume that we're not falling into the same trap as, you know, other VCs who maybe don't look as diverse as us on the surface. We've spent a lot of time looking at, and, you know, you guys will have read the same research as us, you know, these topics around. Let's talk about female founders for a moment. The questions that investors typically ask female founders. And so, you know, the research, to paraphrase briefly, suggests that the questions that as investors we ask female founders tend to be around risk mitigation, right? What will you do if this goes wrong? How will you handle this? Isn't this a potential pitfall you could run into? Have you thought about this problem? And the questions that we typically tend to ask male founders are, you know, how can you cope with growing at this speed? What's the next step once you've conquered this? You know, where's your next round of funding going to come from? So much more forward thinking, much more about progress and growth, and for the female founders, much more about risk. And so we're really thinking about that, thinking about how that shapes our founder interactions. We've also got some of our, you know, senior investors who are very attuned to this. So, you know, we're thrilled to have Nagaraj Kashyap, who joined us recently from Microsoft, from M12 Ventures. We were talking at an event that we did internally about male allyship on International Women's Day. He told this fantastic story about his meetings with one of his senior team members, female team members at M12, where it didn't matter how many times she asked the question, she'd led the due diligence, she was leading the meeting, this founder would direct all of his answers to Nagaraj. And in the end, you know, told the story about how he stopped the meeting and said, like, sorry, just to be clear, like, she's in the lead, she's the decision maker, please address your answers to her if she's asking you the questions. We benefit from having, you know, fabulous investors like that who are attuned to some of these dynamics. And yet we have so much road to cover and so much more to do in line with the industry. But, you know, I think we can be appropriately self-critical as well.
Thank you. I think that's, yeah, super on point and very, very self-reflective as well. The second area that we tackle in the white paper that we're launching today is on what we call breaking into the club. And so that's trying to help solve some of the asymmetries around social capital. So we talked about how do you get into that VC aspect. You know, one thing we found is that 56% of European VCs have virtually no non-white connections in their trusted network. Now, as when we spoke, you said that accelerators need to play the role of the rich uncle, or indeed rich aunt, in a founder's life. And I thought that was a really great analogy, especially because it to me at least, it goes beyond just funding. It isn't just money, it's also connections, it's other support. I wonder, could you expand a bit on that for us and what you meant by that comment?
Yeah, absolutely. Well, I mean, I've been very fortunate in that I grew up in Southeast London in Lewisham, and yet I ended up working in Zurich in Switzerland, right, in an investment bank, right. So I've come from very different backgrounds and worked with very different people. So I've seen it firsthand as well, the level of nepotism that can occur in these environments. I won't name any names or tell any stories about it, but I've seen situations where people have ended up on trading desks because their rich uncle happened to know the head of XYZ. Or I know other people who lost a lot of money, um, rather than getting fired, were shifted to another desk. And then because they're very good at playing golf with such and such, ended up leading the desk in about 10 years, well, 5 years' time. And I've seen all sorts of levels of this over and over and over again. And when I talk about the rich uncle piece, I talk about the social capital problem. And I'm going to speed through this very quickly, but this is no disrespect to anyone who's come from that background, but it's just it's an example of the challenges that we see in this area. In that if you've gone to a private school, if you've gone to an elite school, as it were, those people that you went to school with almost certainly then went on to university, one of the elite universities. They probably left those elite universities and then joined the top law firms, the top banking firms, the top consultancies, maybe in some cases the top technology businesses, or in some cases they've gone on to set up their own businesses. Then over the next 10 years, that decade, those individuals have then gone on to partner roles, director roles, managing director roles in those organizations. That individual who went to that elite school, they now have an established network of people, right, who act as that rich uncle for them, right, as well as probably having the rich uncle who can introduce them to your next client, your first investor, your first co-founder, right? And all that individual had to do was go to school. That's the key thing. That person didn't have to actually do anything. Don't get me wrong, they still have a journey that they have to go on. They still have to put in the time and the work and the effort, but they haven't had to expend the effort to get to that starting point. And you and I talked earlier about the race, right? We talked about this before, the starting point, and how everyone has that same opportunity. We all have the same opportunity to run the race. We all have that same opportunity to start a company, but we start from different positions. Some people get bussed to that racing line in a Mercedes-Benz by their parents. Other people have to walk to it. And then there's this other group that have had to run for 20 miles barefoot in cold weather just to start the race, right? That's what they've had to do. And then somehow through sheer talent, capability, skill, luck, they've actually managed to win. They now become the archetype that every one of us has to reach to achieve just to do that. Now imagine if instead of having to expend all that energy just to get to the starting point, that entire group of people could utilize that energy to run the race. That's the difference, right? That's what we talk about when we talk about privilege. And I know people hate talking about it, but white privilege as well. But it's not really about white privilege. It's about elitist privilege. And the difference is having those rich uncles and those established networks create for you. So when we say about accelerators and incubators, and I talk about the rich uncle being there, what we're talking about is actually creating those networks, doing those introductions, helping you find those investors. But I tell you now, the difference between finding investors versus the big challenge, which is clients, is the difference between giving a man a fish and teaching him how to fish. Investment is fantastic. It can juice you, it can grow you, it can develop you, it can build your organization, you can scale up. But if you can get someone clients, if you can get them in the door, you generate a revenue stream that allows that business to actually grow and support itself, wash its own face, and then generate the metrics they need to be able to go and get the investment. So when I talk about the rich uncle, I'm covering all of these areas. I'm talking about that social capital, that social network paradigm. I'm talking about creating these environments, these ecosystems that they don't have. Because we often talk about friends and family around. Just go and raise a couple of $100K from your friends and family. But I tell you now, the black lad from Streatham doesn't have that, right? I was that black lad from Lewisham. I certainly didn't, right? So this is what we're talking about.
Yeah. And I know, Catherine, the Emerge program did some of this rich uncling, partly with these SoftBank portfolio companies, I believe, and also with, I guess there's another aspect of Emerge that I'd love you to touch on, which is around the demo day and how you ran that demo day, how you helped bring access to investors in a meaningful way that it sounds like it really moved the needle. Could you touch on that a bit for us?
I can. I'm chuckling to myself because, like as I grew up in an investment bank, and it's funny that he refers to the rich uncle, because I grew up in the HR space, so we saw a little bit of the phenomenon he's describing, and we used to call it the idiot nephew phenomenon. So I'm chuckling to myself because it
saw a few of those.
exactly. Anyway, we digress. Yeah, the way we looked at this from the Emerge perspective was really shaped as we went through the program. And so, again, I think it's too easy to sit on these panels and write these papers and pretend that kind of, we had it all sorted from the beginning and we knew what we were doing. No, this is the first time we've done this, and we had to, as we went along, figure out what would be of most service to the community that we were trying to work with, which was the first cohort of founders. And so Emerge at the very beginning was an equity-free program. It was a mentorship and connections and access to the portfolio and help with fundraising. And don't get me wrong, that's unbelievably valuable. But it also became clear that that wasn't enough. And so as we went through the program, we pivoted and we actually, internally, and Ez has lived through enough of these big corporate organizations to know that this stuff isn't always straightforward. We pivoted internally and changed from a mentorship program into an accelerator which funded. And so I think that's important also because it shows a little bit the way we thought about this and the way we developed our thinking as we went along, which I think is helpful from a kind of behind the scenes perspective. But one of the things that was really surprising to us, and this builds on a little bit what I was describing, we had people apply. So I already told you, we put out with almost no marketing that we were doing this. To S's point, we put up our hand and we said, we're here and we think this could be great. And would anyone be interested? I had this ridiculous number of applications, and people were applying to us who'd participated in Y Combinator or Techstars, or what we viewed as the absolute elite of incubators and accelerators, and they are. And what we learned through our conversations with these founders that really took us aback was absolutely you can be a pre-seed founder and you can go through one of these fantastic incubators. That doesn't in itself solve the problems, right? You're not at that point set. Because if you're coming from an underrepresented background and you don't have the network in place that some founders do, the incubator experience is fantastic and you can still run into a wall. And so that's what we found. We found founders at seed stage, even some Series A founders who were still running into that wall, who after their participation in a fantastic incubator were still then struggling with the next round of fundraising or the next round of developing clients or the next round of pivoting their business to deal with COVID, which we happened to kind of fall right in the middle of. So that was fascinating for us, and that will shape the kind of the stage at which we play in the European space. But it was also, I think, in a way, an extraordinary thing that we ended up running this as a virtual program. And so instead of it being a sort of slightly cliquey Silicon Valley program where everyone, had to live within a specific demographic, it meant that we had founders from all over the place in the US, which from a socioeconomic perspective helps. So Silicon Valley is not, the most diverse place to live. But it also meant that founders were able to make global connections, which was incredible in terms of, what we've just been talking about in terms of access to business development opportunities. It also meant that the hurdle for getting a huge number of VCs to come to demo day was very low because it was a Zoom demo day and one of the first Zoom demo days that any of us have been to. And so, you know, we were talking to Christy Lagali, who's the CEO of Rebellious Foods, who's one of our superstar companies. Her view is that typically, you know, as a founder, particularly a founder from an underrepresented background of some sort, and, you know, Christy is one of the most inspiring female founders we've met. She reckons you typically need to engage with something like 60 VCs. That was her experience, to give you an check. I mean, it's already a huge number, 60 VCs. We had 100 VCs on a showcase. They hopped on for an hour. They saw the unbelievable plethora of talent. And, you know, as we were talking about earlier, talent is not in short supply. That's not the issue here. But in one go, because we have a bit of convening power in the Valley, we were pleased to be able to bring together this extraordinary group, which I know accelerated the fundraising progress for these companies, you know, materially. And so that, I think, is a good example of where, you know, a bigger player in the space can use our convening power and use it for good. But by the way, also, you know, make some fantastic introductions for VCs to these, you know, exceptional commercial companies.
Yeah, really interesting. And I think the next area, so I know we're sort of coming up towards the question time, and please do post them in the chat if you have them. The last area I kind of wanted to touch on is what we in our white paper call financing the gap, and it sort of touches on obviously the points that we've been discussing. One quite extraordinary point, I think, is that 83% of venture firms report that they have no women at all on their investment committees. And Catherine, I wonder, we've kind of touched on some of this already, but I wonder if you could bring some of this to life for us. So you've said in the, like, as we've spoken about, the companies of tomorrow should represent the world today. And we've talked about how the US will soon be a majority minority country and the very real investment opportunities that accompany that. One issue, of course, as we talked about earlier, is that investment teams don't reflect the world they operate. And I know SoftBank has implemented the Bruni rule in hiring, so have we. And I wonder, what else can investment vehicles like yours do to address this type of issue?
Yeah, so here I have to quote a great friend of SoftBank, who is Monique Woodard, who leads Cake Ventures, which is a fabulous early stage venture fund. And Monique was one of our advisors on Emerge and so critical to the program's success. And her catchphrase seems to be, make the hire, send the wire. And I really love that because, you know, in my business, in the people business, we're prone to spending a lot of time sort of talking platitudes on this topic, and sometimes those lead to action and sometimes they don't. Make the hire, send the wire. That is the long and the short of it. And so, listen, I give ourselves a B+. I think we've done quite well at sending the wire, and, you know, Emerge, the Opportunity Fund, I think there's lots that we're doing there and lots more to do. Making the hire, some progress, not enough in my opinion, and equally importantly, you know, and maybe this is where I make Monique's catchphrase less catchy. Once people are with us, they need to be able to thrive. And so, you know, we talk about D&I and there we talk about inclusion, but I like innovation just as much. You know, inclusion means that once you get through the door, it has to feel like a place that you belong. It has to feel like a place that you can come to work, and I'm a bit allergic to the phrase bring your whole self to work, but yes, honestly, you can come to work and you can talk about what you did at the weekend and what your family life is like and what the challenges are of, you know, managing elderly parents sick in Lincolnshire, and like all of that stuff that's real for our lives, oh, Larissa, that's real for our lives. You have to be able to come to work and talk about that stuff. And so a lot of what we've done has been in that space. I'm not going to pretend that we've done things which are so radical that I don't think anyone else has thought of them. I think lots of us are trying similar things to try and you know, make progress in that area. We've been particularly pleased with some of the work we've been doing around board diversity and how we've been working with our portfolio companies to express to them our importance, the importance we place on diverse boards. We work with an organization called Him for Her, which is really great at getting board-ready women into those board seats. As an example, we've been working with Afrotech in the US the last couple of years. Again, about us sending out signals into the ecosystem that we are here and that we are excited about investing in the world's best founders, and that we know some of the world's best founders also happen to come from diverse or underrepresented backgrounds. So happy to answer more in Q&A, but I also know we're on the clock. Maybe that gives a bit of a flavor.
No, that's perfect. And as I had a last question for you, which is, I'd love to hear more about ImpactX and all that you do, but it's really, you're running a fund that's driven by social impact, also by financial returns, clearly. And I'd love if you could tell us a little bit about your experience setting that up. And clearly other people who are on this call are interested in this. So, do you have any recommendations for others who maybe are either looking to launch a similar type of fund or how to think about running it, some of the challenges that you've had perhaps along the way? Just be really interesting to hear more about that.
So before I answer that, just a caveat, I'm not the CEO of the fund, right? So, but I've been a core member of the team since its inception. So I've been running alongside, supporting in this process. So, so I just wanted to say that first. But I mean, some of the challenges, we're a first-time fund, right? And in all honesty, building a first-time fund is probably one of the hardest things you can do in startup land. And one of the biggest challenges is that as a startup, you can often raise money off of an idea. I don't recommend you try that unless you have a positive track record of building startups before, but you can do it. You can sell it on the dream and the idea and the concept. With a first-time fund, and most funds in general, it really does come down to what investments have you done? What is your track record? Has this team worked together? Demonstrate your ability to drive a return. That is a very difficult hurdle to overcome, right? And then the other piece for the GPs or the wannabe GPs out there is that you also have to participate in that fund. So do you have the ability to do that? And where is that going to come from? So there are so many challenges in, being able to A, have the financial capability to participate in the fund, B, have your own social capital network to be able to attract those LPs who are likely to invest in you. And then finally, build a team that has the collective track record that you need to demonstrate that our thesis works, right? Whatever that thesis may be. And to be clear, as a diverse fund, you don't necessarily have to only focus on investing in diverse people. It's similar to what Catherine said, which is just because we invest in diverse founders doesn't mean our only focus is ESG. We are looking to drive returns irrespective. But our core focus is that they come from a diverse background when we do it, because we want there to be some form of social benefit, right? So I think the key thing really is it all comes down to that track record. And how do you start to build that portfolio, virtual or otherwise, of collective investments and progress and return? So that's whether you build a team, get them to work together, create an angel fund, start investing, get out there doing that. The way we did it at ImpactX, we actually created a founding members group that put in their own money to help bootstrap the fund, basically. So we almost did our own friends and family round to create our own collective track record, which is where a lot of our investments have come from. And that's how we're now having those conversations, by then getting out and making some noise about what we're doing. And, to be honest, the biggest marketing thing we did was to put our hand up and say, we're here, and build that pipeline, demonstrate the data. So I'm the CTO in residence for the fund. I have the data. I've built a pipeline. I can tell you exactly how many founders we have, exactly what types of startups they are, exactly how much money they've raised, exactly how much revenue they're generating at this moment in time. We have all that information. And all of a sudden that becomes very interesting. And I have that on over 1,000 companies from diverse backgrounds, right? From over 50 countries, right? So it's all about doing everything you can to almost level the playing field as much as possible in order to be able to get out there and get that interest from those LPs.
Super helpful. Thank you. I wanted to open, I know we've got 10 minutes left. I wanted to open for questions. And I think, Dupsy, I'd love to ask you if you could share yours. I know we may have touched on some of this already, but please do
Yeah, sure. Hi, everyone. I'm Dipsy Abiera. I'm the head of global innovation for International Airlines Group. I sit on the CVC there, and I used to be a founder myself. In that report that you mentioned, whilst I was a founder, apparently only 10 black female founders managed to raise investment, which is a real shame. And some of the themes around compounding, I think, are really interesting that you raised. Because if we don't get that, then how do we continue to support? So my question is a really simple one. As a decision maker in one of the decision makers in a fund, and also a person who introduces as clients a potential client to multiple tech founders, especially in emerging tech. What concrete practical steps do you think, other than hiring people like me, who can also force that agenda, what practical steps do you think that VCs can make and corporates can make in order to address some of the themes that you have been talking about?
Ez, do you want to take it first?
Yeah, it's so difficult because the one we start with is always hire more people like us, right? I think that's usually the place we go to. One of the things I often talk about is the data and the data points behind it, right? And people like to say data doesn't lie, but it doesn't often tell the whole story, right? If we look at revenue figures, great, that's a great number, but doesn't tell you about how those individuals gained access to those clients in the first place, right? Where did they come from? So I think a big thing has got to be fundamentally to look beyond your own networks, look beyond your own pattern matching agenda, and start to look at wider issues around how these teams actually got to where they are. What have they overcome to be able to achieve this so far? What are the hurdles that they've managed to get past? Because it's fascinating when you look at startups and we try to assess their potential. We look at always, the revenue, we look at their pipeline, we look at their network, we look at all these things. As soon as something goes wrong, the first thing you look at is what's gone on with the team and can they pivot their way out of this? So why don't we start there, right? So that's probably the most concrete thing I could suggest you do. Have a look at the team, right? What do they bring? And not just their network, but their actual capabilities to build this company. And if and when things do go wrong, because I guarantee you, if you're looking at early stage startups, what they're doing now is not what they're going to be doing in 2 years' time. So let's accept that, right? And recognize, do they have the abilities to respond to change appropriately? And can they do that? Can they drive in that way? And I can't really put concrete steps down, but it's more about how do you assess and how do you approach these founders. But ultimately, widen your networks as well to ensure that you're getting more of these types of founders coming in the door. One of the things I talk about from a recruitment perspective is that when we look at recruitment, our biggest challenge is, well, what's good look like? And everyone might think, well, I'm good, right? That doesn't mean you look in the mirror and say, okay, what do I look like? But you look at your history, you look at your CV, your background. And in a homogeneous society, which the UK is, it's only 13, 14% non-white. And most of that is situated in various city centres. For a lot of people, that background will mean that those people will look like them, right? That's the simple reality of it. So the minute you start falling back to those old patterns, you lose that diversity and you actually restrict your choices. And by narrowing your pool, you don't increase the quality, you reduce your quality and you reduce your capability of finding good people. And that's why I love what Catherine said about geography. As difficult as COVID has been, as challenging as it's been, this fact that we can now have this call right now with how many have we got? Over 73 people on this call from all over the country, all over the world, right? And you're listening to me speak. That's amazing, right? You're listening to this lad from Lewisham had to reset his A-levels, talk about entrepreneurship and venture capital. This is what I'm talking about. Who would have predicted that me, having reset his A-levels, talked his way into getting the opportunity to go to university, would have built a startup that raised over £200 million? Could you have predicted that based on your current approach to investing? Probably not, right? So we need to expand our minds slightly. I know I rambled, it's not concrete, but hopefully that gives you some ideas.
Catherine, do you have anything? And whilst you're thinking, Catherine, if there are any founders frankly, of any background for whom I can help with anything mobility or travel related, do get in touch with me. I'm here to help, like I'm sure everybody else is here, Catherine.
Yeah, my answer would be that if you are a non-diverse investor, and by the way, that's totally fine, think extremely broadly about who the potential users are of the tech in which you're investing. So, 50% of the users of the tech in which you're investing are women. How much of that tech is designed to solve problems which hold women back in their day-to-day lives? Very, very little. For the most part, we are not using technology as a way to lift up and empower women, as an example. That's a huge opportunity that we're missing. And that's I'm back to the same point, right? That's a genuine commercial opportunity out of which we can make money. That's not doing anyone a favor. I think that's a lens that we could use way more than we do.
Thank you, Mo.
Perfect. And of course, our white paper is filled with tips and tricks. So recommendations there. Yes, there's a question. I know Bernadine has had to run, but it touches on some of what we were just talking about, the geographic side of things. And it's an interesting one. Do we think that, do we think that COVID has improved networking or made it worse, given that we all now kind of are very comfortable doing what we're doing today, which is interacting quite remotely?
I think for sure it has improved things in terms of our ability to access founders who are outside of our direct sphere. I also think that it, to the extent that it is a club, I think it removes that a little bit, because there's just only so much bonding you can do over Zoom, right? If you're meeting a founder over Zoom, it's going to be a conversation which is far more about their business and the realities of the business and how investable it is, than relying on factors which may have influenced an in-person meeting more, such as shared backgrounds or shared interests. So personally, I think that's one of the big advantages of this, otherwise extraordinarily difficult time.
I completely agree. I think it's had its benefits and its challenges, right? So the ability to speak to more people has been a massive boon. I used to have to travel back and forth across London, maybe do 5 meetings in a day. Now I can do 5 meetings in the morning, right? So that difference is dramatic. And I can speak to people from all across the planet without an issue. And exactly as Catherine said, some of those unconscious biases that you have, such as, well, how hard did you shake my hand when I met you? Did you look me in the eye? You no longer have those things because you can't fall back on those natural behaviors that inherently disadvantage certain groups of people. How tall are you? Can I look down at you? Do I look at, oh, you're tall, you're impressive. You no longer have that, right? So it does come down to what is the idea. That said, there are people out there who've struggled with it because they might not have had the bandwidth they require. They might not have had the space to be able to have a conversation. They might not have had good lighting where you can see their face properly. They might have had a lot of background noise. So there's definitely been challenges and issues for a lot of people. But overall, I think from an exposure perspective, it's been a massive benefit. There is definitely a place for that in-person meeting, I think. I will say, as Catherine said, from the networking perspective, there's been an impact. You can meet far more people, but are the depth of those conversations quite the same? Because in this group right now, we can't have any of those side conversations that we would normally have, right? You're all listening to me speak, which is great for me, but maybe not so great for Nzube and Michelle, who would like to have a conversation right now, straight after this, right? So I still think there's work to be done, but I do believe this has been a massive step towards leveling the playing field.
Interesting. Yeah, the serendipity I think we all feel is missing, and yet you have the connection. You can have a very detailed conversation with somebody, perhaps in a more focused way than you otherwise would, right? One last one, perhaps, from Amanda. Amanda, do you want to go ahead?
Hi guys, thank you so much for the conversation today. It's been really fantastic hearing some of your advice. And so I guess just to round things up, I'd love to ask you on the same point about, the virtual world and opening things up, opening opportunities and providing access. If there was one sort of move that any investors on the call or anybody who's running programs can do when they're thinking about creating and opening these opportunities and looking at the success of the Emerge program, would you say that offering that access virtually would be a takeaway, or what would be sort of one move that these program operators can offer to make sure that they're addressing a full spectrum of diverse founders?
Yeah, I seem to spend my life at the moment talking about a hybrid world, and I think that probably applies equally here. So what are the big benefits we can offer with some online programming, and how do we use that to open accessibility? And at the same time, how do we create opportunities for human connection where that exists in person for, you know, all of us who are starved of the ability to see people in real life? And I think that's going to apply in terms of how we open our workplaces up. I think that's going to apply in terms of things like programs, events, that side of things. I think we'll be trying to take the best from both worlds and find a way to make that work.
Yeah, and I think one thing I'd like to add to that is, you know, as investors, as VCs, we're focused on building 21st century businesses, and yet most VCs are stuck in a model that's from the 19th century. So how about we actually embrace the technology, embrace the solutions that we claim we're investing in, and utilize that to open up the doorways, increase the borders instead of reinforcing those fences, okay? So I would love to see everyone take on the responsibility of allowing, you know, cold introductions, putting people in place to actually look through that, making an effort to actually reach out to those individuals, and ensuring that virtual conversations have as much weight as in-person ones do.
Yeah, I think there's something there almost just about not being lazy about it, right? One thing, so like Emerge, Founders Intelligence has also run several entirely virtual accelerators. The first one we did was literally, I was the entrepreneur in residence. It's kicked off March 23rd. So we thought until the weekend before that we might possibly be doing it in person, had to pivot it. It went impeccably, I have to say. Like the ability to bring in people from around the world, to make those connections with other people around the world for those founders. If anything, I almost think perhaps we almost shouldn't think about running exclusively in-person accelerators in the future, just in order to make those connections and to be able to bring as many people in. It was a surprise to us, I have to say. Listen, I know we've run over a few minutes. Thank you all for your time. Thank you, Ed. Thank you, Catherine. Thank you, everyone who helped on the white paper. There's a link to it in the chat. And thank you to the entire Founders Forum team, of course, for helping to put this on, to the SoftBank team, who have been incredibly supportive throughout. I'm sure I'm missing a million thank yous. And if anybody wants to add to them, please do now. Otherwise, I won't take up more of your time. But yes, thanks again. We will have a recording of this, which I think will likely be available tomorrow, if not then soon, from the Founders Forum YouTube page. And yeah, listen, stay in touch. This is such an important topic. We're only at the tip of the iceberg. We know we don't know so much, and there are so many best practices yet to be developed. So many improving, better practices that hopefully will come about from these types of conversations. And I think one of the most important things we can do is just keep on talking about it, keep on sharing. And I know that the only way that we can start to make a change is by involving more of the people who are running accelerators, more of the investors. Let's try to do what we can to get it out there. Thank you. With that.
Ezra, thank you for your thoughtful moderation, and thanks for having us. It was an honor to be able to speak to the group.
Absolutely. Thank you so much. It's been a pleasure.